Welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions, please ask them in the comments of the live feed. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. During today's session, I will be running a poll, so please do engage with that and I'll reveal the results at the end. Good morning, everybody. I hope you're having a good week so far. For those of you who haven't seen me before, my name is Judith Dugdale. I'm a chartered accountant and I live up in the northwest of England. I work for a firm of chartered accountants called MHA Moore and Smalley, and I head up the digital solutions team at MHA Moore and Smalley. The digital solutions team is slightly different to some of the more corporate teams that we have, in that we only deal with small businesses and startups and those that use QuickBooks Online and cloud accounting applications that go with it. The idea is that our team is based just around those small businesses. So we're not off doing week, month-long audits. We're in the office, we're available for our clients, because it tends to be that those small businesses, which are typically owner-managed run, maybe the director is head of sales and head of accounts as well. And when they have a query, they want that answering straight away. So the beauty of our team is that we're available at the end of the phone or on a Zoom or a Teams to help with those queries as they arise, and obviously as well help with any technical issues they might have with QuickBooks Online itself. The firm is a large independent firm, as I mentioned before, and it's based over the whole of the northwest. We cover from up in the north of Cumbria all the way down sort of the M6 corridor, past Lancaster, Blackpool, Preston, Southport down into Liverpool, and we also have offices in Manchester and in Nottingham. We offer everything that you might need as a business owner, from startup help, VAT help with your payroll. We do a bookkeeping outsource delivery service. We have specialist tax planners, independent financial advisors, and then we can help you as your business develops and grows when you may be looking for an exit, be that through a management buyout or a sale to a third party, and we can offer all those audit services that a growing and large business might need. One of the things that we're getting asked quite a bit at the moment is about planning around staff costs. Now, staff costs are one of those things that you just get a bit of a grasp on, you kind of get it all under control, and then either your business grows and you need to take on more people, or as we've just seen in the budget, the government change things like national minimum wage or even hike up taxes. In the budget that we just had last week, there is a rise in cost of employment, and that is kicking in from the 1st of April 2022. And that is because there is an increase in national insurance. So that increase is 1.25%. So that's an employer cost as well as an employee cost. So it will cost you more to employ people than it does today. In addition to that, if you do pay people around the minimum wage, those are increasing as well from the 1st of April. Typically, they increase once or twice a year anyway, and there is another increase coming then. So for anybody that has, say, apprentices, the national minimum wage for an apprentice is going up to £4.30. So that's anybody up to the age of 16 or being employed through an apprenticeship. Anybody that is employing anybody between the ages of 18 and 20, the national minimum wage is going up to £6.56. And then for those between the age of 21 and 22, it will be £9.18. And then the biggest rise really that will have the most effect is for those that are aged 23 or above. And they have to be given the national living wage, which is effectively the national minimum wage, but it's just got a slightly different term. And the national living wage will be £9.50 an hour. Now, you have to legally comply with those rates. You can't pay anybody underneath those rates, otherwise you can get serious fines from HMRC and the government. One of the issues that many employers have at the moment isn't just the actual costs of employment, it's the recruitment of people and indeed the retainment of those staff. I'm sure you'll have seen in the news about the shortage of hauliers. There's also a massive shortage in the hospitality sector, and it's getting increasingly hard for employers to keep staff happy and prevent them from moving on to a competitor. So we get asked all the time, what can I possibly give my staff that isn't going to cost me a fortune, isn't going to be an employee benefit, which results in a tax charge for them or us? How can I make my firm feel more, more enticing for staff to want to work for me or stay working for me? So the first thing I just wanted to cover is what an employee benefit is. So an benefit is something that you give to an employee that is outside the payroll. So it's not part of their gross pay, and it's not going through the HMRC payroll system and being shown on their payslip. That could be anything from, say, you might give them the benefit of using a car, you might provide them gym membership, you might give them private health cover. All those things are what we call a taxable benefit on the employee. And that means that their tax code changes and they effectively pay a bit more tax on their income because of this extra benefit that they're getting. There's also a cost to the employer for that as well. And you have to pay Class 1 national insurance on all the benefits that you provide to all your staff. So please, before you decide, I'm going to give this little perk, as it's often called, to my employees, speak to an accountant and just make sure that it's not going to be a taxable employee benefit. Quite often as well, ask people about what other little bits they could give their staff. And some of these things you can give to your staff without any consequences whatsoever for you or the employee. But again, we just need to double check that you're not going to land yourself a tax bill or the employee a tax bill. So I just wanted to cover off a few things. So quite often I get asked, it's my employee's birthday, so I'm going to give her an extra 20 quid. You can't give cash in any sense of the word to any employees. If you're giving them cash, it has to go through payroll and it has to be taxed. What you could do for an employee when it's their birthday, you could buy them flowers, you could buy them another sort of gift, or you could give them vouchers for them to go and spend wherever they like. Now, as long as those flowers, those vouchers are under £50 in value, then there is no tax implication for you or for your business. So we do actually have an awful lot of our clients who, on the employees' birthdays, they get a £50 voucher, and it tends to be the shop of their choice. It can't be a voucher that is redeemable for cash. It has to be sort of a Tesco voucher, Marks and Spencer's voucher, John Lewis, just to name a few. That's worked for me for 5 years, so I want to give them almost like a 5-year bonus, but I don't want them to get taxed because then it will make it seem that whatever I'm giving them isn't very much. Now, long service awards for HMRC purposes are 20 years plus. Once you've worked for somebody for 20 years, your employer can give you a long service award, which can be up to £50 per year you've worked. And again, there are no tax implications. You can't do this if you've had somebody work for you only 5 years, or only 10. There, you are still stuck with the £50 voucher limit. There are some allowances that are already pre-built into HMRC to help employers. So things like overnight allowance. You might be a business in, say, construction, or maybe delivering goods from one end of the country to another, or even overseas. And you may have people that have to work away from home. Obviously, you can reimburse them their hotel costs as long as you've got an invoice. But also HMRC will automatically allow every employee a £5 overnight allowance if indeed they are away from where they would normally be at that time. There's obviously, you can reimburse people for their mileage if they're on a business trip that isn't to their place of work. It has to be away from the place of work. And you can provide things like a death in service policy, which is also not taxable on the employee if it's set up correctly. Now, it might seem a little bit morbid, a death in service policy, but actually it can. People that have got kids and families and need to make sure that they know that everybody is going to be looked after should anything happen to them. A death in service policy can be quite a good appealing benefit to give your staff. Finally, we're obviously coming up to that time of year where people are looking at Xmas parties. As an employer, you can put on a Christmas party and you can spend up to £150 per employee without any tax implications at all. So you might want to book a restaurant, put some money behind the bar. Again, as long as it's up to £150 per employee, you can do that and put it all through your business and there'd be no tax implications. The other thing you could look at is possibly increasing the amount of holidays you give your staff. Now, obviously, that does have an implication. Whilst it might not be a physical extra monetary value that you're having to pay them to give them that holiday, just remember that, say you're in hospitality, if you give somebody an extra day off each year, you're going to have to pay somebody to cover them. If you're in, say, consultancy or almost like an online shopping, you can deal with having somebody off one extra day a week without having to cover that, then it might be a nice little perk. Quite often I see now businesses giving people their birthdays off, for example. But obviously, depending on what sector you're in, it depends on whether that actually has got quite a bit of a cost to you. But there's obviously no cost to the employee. It's not a taxable benefit to have an extra day holiday. So hopefully I've given you there some ideas of how you might be able to reward staff in a way that doesn't cost you a fortune and doesn't tax them, and hopefully might retain some of those staff that you've got. What I'm going to do now is jump in and start taking the questions that are coming through. Please feel free to ask anything around what we talked about today, but also anything to do with QuickBooks Online itself, or if you've just set up a new business and you're after a little bit of advice, fire those questions through too. So the first question has come through from Christian on Twitter direct message. Christian says, saw the budget and was a little bit confused by the government's definition of minimum wage and living wage. I thought the living wage was the amount employers should pay to match the cost of living, but the government doesn't seem to use that term that way. What's the difference? Well, as far as I'm aware, Christian, and it is something that years ago was bandied around that we should have a working living wage as opposed to a minimum wage, but effectively it's the same thing. It's just that technically speaking, it's called the minimum wage where the employees are under 23, 23 and above. It's now termed the national living wage. However, there is the national living wage for London and surrounding areas down in the south, which is slightly higher than what it is in the rest of the country. But as far as I'm aware, that is a guide as opposed to totally enforceable by HMRC. But the rate of £9.50 an hour for 23-year-olds and above is enforceable and should be met from the 1st of April. One thing that just to bear in mind, if you're thinking, oh, well, it's okay because I've only got one 23-year-old, everybody else is above that, so that impact isn't going to be huge to me. Just remember that if that, let's say you've got a 23-year-old that's on the current national living wage, and you're going to have to put them up to £9.50 an hour, and you might have a supervisor that oversees them who's on £9.60 an hour currently. When that person goes up to £9.50, the supervisor might well come knocking on your door asking for their own increase because they want to keep that difference in salary or wage consistent. Now that the other person had a bit of a pay rise, they'll be saying, well, I'm not doing the same, I'm not doing a more important job than that person and only getting 10p an hour more. I used to get 50p an hour more. So you can see a knock-on effect throughout the organisation once the minimum wage does increase. So just bear that in mind when you're looking at who you're going to have to increase in April. You may well have to increase some other people not necessarily caught by the changes. I've got a message from Samira on Instagram direct message. Samira says, when it comes to bonuses, is there a fair way to decide what each employee could get, or is it best just to give everyone the same? Now, Samira, this is a really difficult question. It's really, really hard to decide when you've got multiple members of staff how to do a bonus scheme. We've come across it loads of times with clients where we've tried to help them, because you have some people who are directly influencing sales and indeed profitability, and you have other people who are not directly influencing it, maybe admin people behind the scenes, but without those admin people you wouldn't necessarily be able to achieve those greater sales. So some organisations, like you said, will give a across the board bonus and everybody gets the same thing. And that might be based on a overall company profitability or overall company sales growth. But other people will split staff into boxes and almost have sales staff have a bonus or commission structure to try and entice them to sell as much as possible. And then the admin staff might have a bonus scheme based on the overall profitability of the business. You've really got to have a think about what works best within your organisation and try to make sure that nobody within the organisation feels like they're not an important part of the business, which can happen sometimes with bonus schemes. If certain people are left out, they feel like they're not appreciated. Ashan on Facebook Messenger, he sent in a message saying, "Hi Judith, we're not doing an Xmas party this year due to coronavirus, but we want to put money towards something special for our employees, perhaps something sent out to them. What could our options be?" So Ashan, we're actually doing something very similar at the firm I work for. As I said, I think in the intro, we're a large independent firm of accountants. So our staffing numbers now are 360, 317 members of staff plus 28 partners. So there's an awful lot of us to get together at Christmas. And we always used to have a big Christmas party, hire out a hotel or like a sporting venue. And do a big do there. Now, again, because of coronavirus, we don't feel comfortable doing that. And there are very limited options if we did want to do it. So what our employers are doing, the firm as a whole, is we're sending Amazon vouchers or Marks and Spencer's vouchers, any retailer you can add in, to our staff. They decide where they would like their voucher from, and we're sending them a voucher through like an online method. Now, that voucher does need to be a maximum of £50, I'm afraid, even though it is in lieu of a Christmas party. HMRC, a Christmas party has to physically be a Christmas celebration. If you're sending vouchers to people, then you need to do it up to the value of £50. Tommy on Twitter direct message. Tommy says, do businesses who are not VAT registered need to be MTD compliant as well? So, Tommy, currently, if you are a business that is not VAT registered, you do not need to comply with MTD. Making Tax Digital currently is just for VAT registered businesses and those that are above the VAT threshold as well. That might seem a little bit of an odd statement, but some people register for that when actually they haven't quite yet hit the threshold of £85,000 worth of sales. They do what we call a voluntarily register for VAT. However, this will change in the future. So the first change is from the 1st of April 2022, where anybody that is VAT registered voluntarily will have to comply with Making Tax Digital, irrelevant of what your sales are. Following that, in April 2024, it is likely, it was meant to be 23, it's been delayed a year already, that anybody that runs a sole trader business or a partnership or is self-employed or even a landlord, they will have to comply with Making Tax Digital. So that's from the 1st of April 2024 at the moment, but watch this space. HMRC are changing those dates fairly regularly. Like I said, it was only probably 3-4 months ago we thought that was coming in a year earlier, but it's been delayed a year. And then the year after that, it is proposed that any limited company that is not VAT registered would then have to comply with Making Tax Digital for corporation tax purposes. So if you're a sole trader, you've got another couple of years yet. If you're a limited company that's not VAT registered, you've got 4 years before you need to worry about Making Tax Digital. The only thing I would say is Making Tax Digital in itself, while it has been seen as a bit negative to some businesses because of the changes they've had to make, I actually personally think that the changes instigated by Making Tax Digital in terms of the software that you then use is actually really positive for businesses. using cloud accounting software like QuickBooks Online, which is fully MTD compliant, actually helps you make the most of your business, because you've got up-to-date information, which means you can make really quick decisions that affect your business's profitability. Instead of maybe some more old-fashioned ways, such as manual records, where it's very hard to see at a touch of a button how much money you're making on a daily, weekly, monthly basis. So I wouldn't necessarily avoid making tax digital ideas just because it doesn't apply to you yet. There's some really positives out of being MTD compliant. The next message is from Maria on Instagram direct message. As an employer, can I enforce staff to take a holiday before the end of the year? A lot of people didn't take leave during lockdowns, and now I'm worried everybody will be off at once. So, Maria, the first thing is I am not an employment law specialist, and you may well want to speak to somebody that provides some HR advice just to double check what I'm saying. The first thing is to look at your employment contract and make sure that your employees in their contract, it doesn't state that they choose when they take the holidays. Most employment contracts nowadays do say that the employer can refuse holiday requests, and also can enforce periods when they want the staff to take on holidays. They might not say that in it. If it does say in your employment contract that you can enforce when holidays need to be taken, then you've got no problem whatsoever, because the employee has signed that employment contract. I'm trying to think of the name of there's an organisation that you can go and get some help, and it's just gone off, it's just at the tip of my tongue then, and it's just disappeared. But if you Google employment advice free, this website will come up, and it's like a national one. I just can't remember what it's called. If I remember, Maria, later, I will let you know. And feel free to send me an email, and I'll see if I can point you in the right direction afterwards. But your fear of everyone being off at once is a real fear for a lot of employers at the moment. What I would say is to encourage people to take their time off when you want them to, through an explanation of the impact on the organisation. So you might want to say to people, look, I appreciate you didn't want to take time during lockdown, but you've got all these holidays, and if you all take the time, I'm going to have to shut, or I'm going to have to employ other people, and it's going to be an extra cost in the business, which makes everything a lot harder for me. And try and be honest with people about why you want to. We've done the same thing where I work, where we have been encouraging people to take their holidays. We've explained the issue, and ultimately we have explained to people that if you all come and say you want the same period of time off, then you can't. And we have a strict policy in terms of how many days holiday you can carry over. So if people leave it to the last minute to take the holidays, then they're not actually necessarily definitely going to get those holidays. One thing you do need to be aware of, there is a minimum legal entitlement to holidays that everybody has to have. Now, I think the government put in place during the last financial year that because of lockdown, people haven't necessarily taken them, or people have been on furlough, so haven't taken holidays, and they allow people to carry over some of those days, and for employers to do that. So just make sure that you're not going to mean by refusing somebody's holiday, they will not legally have taken the minimum number of days that they have to take in a year. Like I said, I'd get some HR advice, Maria, just to make sure that you don't leave yourself open to any sort of complaints from staff or any litigation even. Anne on Facebook Messenger, she's asked the question, great news for workers that the minimum wage is generally rising, but I don't understand why there are age brackets. Why are under 23s worth less and under 18s even less? Is there a legitimate argument for paying them less? So Anne, as a proactive equal opportunities employer, then you may decide to pay everybody the 23 minimum wage. You don't have to pay them the national minimum wage if you believe that the job that they're doing is worth the same amount as somebody that is older. The national minimum wage, the reason why it's structured in different levels is because in theory, when it was set up, that it generally covered things like hospitality, retail, where you may well find that a younger member of staff was doing something that was less less restrictive, less onerous, and therefore didn't warrant as much of a wage as maybe somebody that was doing something more complex within the organisation. So you might well have had, let's say, 18-year-olds waiting on, but you would have a 19-year-old behind the bar, and that gave a little bit more responsibility because they were handling all the cash. So you wanted to pay them a little bit more. Now, somebody under 18 wouldn't be behind the bar. Somebody over 18 is, and that's possibly one of the reasons why that's an age bracket. But it comes down to, it tended to be that the younger you were, the more menial, straightforward tasks you were doing, and the older you were, the more complex tasks you were doing. But it is a minimum wage. You do not have to comply with that. You can pay your staff whatever you want as long as it's over the minimum wage. Joni on Instagram direct message. What advice have you for getting a grant for small business? Is there anything I need to look out for? I own a bar with my husband and we're hoping to upgrade some of our equipment and furnishings. Okay, Joni. So when I first started in accountancy, which was many moons ago, 21 years ago, there used to be a plethora of grants available to small businesses. There is very little out there now, particularly for a business in your sector. On a national basis, because obviously I don't know, Joni, where you're based, so I'm just looking at this in a sort of a national view. What I would say is there are startup grants normally from your local authorities in some areas, some chamber of commerces, and business organisations will provide a new business with almost like some matched funding, as they call it. A lot of the funding came from Europe, and it was around this matched funding principle, so that you paid for something and you got the same equivalent for free. But it did tend to be more around business advice, around marketing advice, social media, that type of thing. There have been, to my knowledge, very little in terms of being able to buy new equipment via a grant. I caveat that with, if you're going for green, so I don't know, state-of-the-art plumbing system, or if you're in a bar, a new state-of-the-art sort of refrigeration system that is going to be much greener than it was, you might well find there are some grants. I would speak to your accountant. They usually have a grants database. They'll be able to tell you what grants are available. Barring that, Google your area and grants for small businesses. And there are some grant finder programs out there that are free to use, and they will list all the grants in the area. It does tend to be very much focused around sort of digital and green energy at the moment. So there may not be a great deal available at the moment. The good news is, though, I don't know whether you're a limited company, Joni, or not, but there are some really good tax incentives for upgrading equipment and furnishings at the moment, with what we call the super deduction that's coming now, and that means that you get more. You don't get just what you put in back as a tax deduction. You get an extra bit of a tax deduction. Speak to your accountant about that and make sure that what you're buying fits into that super deduction, which will give you a little bit of a saving on your corporation tax bill. I think we've got time just for one more question, which is from Hayley on Facebook Messenger. Hayley's asked, is there any advice on how best to set up perks and reward systems and how to incentivise long-timers? My previous experience in businesses have been quite naff offerings and only a limited number of employees actively use. Hayley, just very quickly, because again, it's a very detailed area, what you're asking about, and you probably need to speak to your accountant to get a bit more information about how it would affect you, because I don't know what sector you're in. Every sector is very different. In terms of incentivising long-timers, the easy thing is extra holidays after they stayed with you for X period of time. Other good little perks are when you're short of staff, offering staff a reward if they refer somebody, and once they've gone through a probationary period, giving them a bit of a bonus based on that. And then actually people that work with people that they like are more likely to stay working for you. So that's a nice, easy one. Some of the offerings are naff. I get it, because it's costly to the business. But yeah, speak to your accountant and just see if they've got any ideas, because they will deal with other businesses in your sector and know what works. Okay, so the poll results are in. Do you have any staff vacancies? So nobody said, yes, we've got a lot. 20% said, yes, we have some, and 80% said no. So that is fantastic, because in the press, as you will have heard, there are huge amounts of vacancies everywhere. So I'm really pleased that everybody out there watching today, majority, 80% of you seem to be in a good position in terms of employees numbers. So hope that sticks the same for you going forward. Thank you very much for all your questions today. It seems to have flown by, and sorry if I didn't get round to answering your questions. If you want to find out a bit more about setting up your own business or questions around incentivising staff, then please do look at our website, which is www.mooreandsmalley.co.uk, or you can send me an email direct at digitalsolutions@mooreandsmalley.co.uk. Coming up on Ask the Expert tomorrow is Special Advisor to Franchise Industry and multi-brand franchisor Sean Goldsmith. So please do tune in for that. A reminder that if you need any more advice and you haven't done so already, join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. Have a great day, everybody.